Good evening, everyone. What I wanted to do is I wanted to start off and talk about some money management. And I thought it would be of interest if I showed you on a spreadsheet how paying attention to money management can help you with your account. If you see on my screen, I have a spreadsheet set up. The first item is the maximum risk drawdown, and I'm going to change that to like 5%. The second item is your maximum risk per trade. Now, ideally, you'd like to be at 1%, but if your account size, depending upon the larger your account size, the lower you want this number to be. But if you have like a micro account, you might go as high as 2%, but it's probably better at 1.5%. Now with this, I can set my maximum stop loss, and let's say we shoot for 30 pips. Now, your brokerage leverage can be quite high. I mean, not in the United States where I am, but all over the world, it can be quite high. I guess you can be as high, well over 400 to 1. But in the United States, we tend to be somewhere around 50 to 1. Now your minimum lot size, if you're using, this is going to depend a lot on your account size. And what I would suggest is if you're a newbie, and you want to use real money after you've played around with your demo account, and if you start off with a micro account, you can go down as low as $100 in your account. It's probably better to have, $200 to $500 in there to give you a little more flexibility. That flexibility can come in instead of having to, at a micro account, which is 0.01, this would allow you to put on a trade that has 2 micros or 3 micro accounts. And that way you can take off at various levels a portion of your trade. It gives you the flexibility in learning how to properly trade in Forex, even though your account total dollars might be $500 or less. But as you go up to the micro account, you might raise it to $1,000, and you can actually have a standard lot account at $5,000. For the purpose of this illustration, I'm going to put us in at a tenth is my lot size. I want to use mini lots. And for that, I have to set this up as number 1. You can see over here, 0 is for standard lots, 1 for minis, 2 for micros. And just to make numbers easy, I'm going to put in a larger number than you would normally use for starting off as a newbie, but I'll put in $10,000. Now, the important thing of this little demonstration is that when I make a trade, I put in the number of pips I gained or lost. So let's say I entered my first trade and I only made 30 pips on it. What happens is the balance goes from $10,000 to $10,300. And my total pips is 30 that I made. And you can figure the profit and loss, etc. Now, in this green column, you'll see that the lot size has changed to 0.7 lots. This means that in order to, I can go up to a lot size of 0.7 and still be within my risk tolerance that I've set up. And that's important. If I try to exceed that 0.7, it'll say tilt. But now let's say, my first trade, I'm really hyped up. But my second trade, I lost 30 pips. So that brings me under my $30,000 again, and I'm down like $180 for my initial balance in the account. But I said, well, you know, it should be all right. Let's see what happens the next time. Let's say I hit again and I have another losing trade. And let's say I do this for a number of trades. I keep going down. Let me see. I have 1, 2, 3, 4, 5 losing trades. But you can see I've only dropped about $500 in 5 losing trades. Now, the importance of this is that when you're learning a method, you should really stick to it. Everybody goes through many losing trades in a row. There's no such thing as 100%. And even if your win ratio is greater than 50%, you're still going to get many losing trades in a row. It'll happen because the market's going to do what the market's going to do, and it doesn't really care what you want to do. So there's 5 losing trades, and I'm going to go up to 10 losing trades. So I think I have 10. 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 10 losing trades, and I've dropped 270 pips. And dollar-wise, that's $630. Well, I finally get a turnaround point, and I start winning. There I've got 30 pips I won. So you can see that the next trade, I can go up higher even. Let's say I got 40 pips on the next trade. So it says now I can use a lot size of 0.3 pips. So let's say I go back to the 30 pips at a profit. Now I've had 3 winning trades in a row. And I'll go another couple of 30 pips only profit. And in 1, 2, 3, 4, 5, 6 trades, I'm back up to my $10,080. So you can see that if you manage your risk, you can stay in the game longer. If you have 10 losing trades, it doesn't take that much to make it up. And the way our system, the S123 system works, there's times when I've seen trades that are 6 to 1 or more. So, you know, it wouldn't take much to get a higher pip amount and a dollar amount. Now, what's interesting is that if I if I had started with only $1,000 in here, that's how all the numbers would have worked out. So you can see I came into a loss, but by the time I'm down to the bottom, I wouldn't be back at my $1,000. And that's because I don't have the advantage of that lot size changing. You see, it's 0.1 all the way down. But now if I had been using micro lots, it still doesn't change, but, well, it does change. I start out at 0.1, 0.1, 0.1, then we start down to 0.01, 0.01, and when I get down to my 16th trade, it's back to 0.1. And you can see that now I'm back up to $1,019. And this is something that Peter taught me a long, long time ago. Even if you have enough money in your account to trade standard lots, it's worthwhile sticking with the micro lots. In other words, if you want to trade one standard lot, you can trade in mini lots, let's say, which is 1/10. Let me make this 0.1. If you change it to mini lots, you can trade 10 mini lots which is equivalent to 1 standard lot. The advantage is that you have the flexibility that you can get partial lots out of it. If you're trading only in standard lots, you are locked in. You can only go 1 lot, 2 lots, 3 lots. But if you're trading the minis, you can go 1.5 lots or any value in between. The advantage is that you can get more lots working in your favor and maintain your promised risk reward that you've set up for yourself. What you should do is make sure that when you look at your account that you set up all of the factors to maintain a proper risk reward. And I would suggest that your maximum risk per trade, really, I don't like to go any higher than 1.5%, and I try to shoot for 1% as much as I can. Now your stop loss, I like to trade daily charts and 4-hour charts, so my stop loss is going to be higher than the 30 pips. But I use a 51 brokerage in my case. I know Lennox uses a much higher number. I like to use a mini lot size because it gives me a lot more flexibility. And my account balance is more than $1,000, but I wanted to use $1,000 here just to show you that how the system can work and how even if you get many losing trades in a row, that you can come out and still get ahead. And the important thing here is to not give up when you see a lot of losing trades in the row. Stick to your plan, review your trades, and make sure that you've gone over them and you understand why there was a wrong trade.